Hi guys, it's Thomas here from COTBase.com. Welcome to this week's Commitments of Traders review. Today we're going to have a look at the 41st report of this year, and as usual we're going to start off with the changes in commercials positions. So here we go. As you may see, we've got the dollar index on top of our list with a 41% change in commercials positions. We've got 46% change in large speculators, pretty large changes. As you can see on the chart, we've never seen such changes in the past 52 weeks. As you can see on the chart here, this is of course a bearish COT change signal. You can see how commercials have gone from roughly almost 20,000 contracts net short to 40,000 contracts net short. That's a huge jump over there. So of course we are expecting a bit of a decline coming soon in the dollar index. This of course is not for sure. It's just what the COT report is telling us. You can see the COT Extreme on the 5 years chart, and I think it is pretty visible that we're more or less in between the two extremes here. So there's not really a COT Extreme to talk about. The last major one was, well actually that was the bearish COT Extreme, and then we had a relatively large bullish extreme. We had greater extremes in the past, you can see, but it does show you how well it actually affected the dollar index, and since then prices have gone higher. So I think it's really the COT chain signal that we should focus on in this COT report right now. Let's move on and have a look at the Mexican peso, where we have similarly large changes in traders positions. We've got 39% change in commercials and 38% in large speculators. Again, we're talking about bearish COT chain signal here, coming at a point in time when prices have rallied a bit. If we open the 5 years chart, you can see that the extreme here is definitely greater. We're much closer to a COT extreme that was actually bullish just 2 reports ago. You can see it over here. You can also see that prices have gone higher. So who knows, maybe this was the bottom in Mexican peso right now, and we could see a change in trend. So of course this should be kept in mind when you act on this bearish COT chain signal, that the bullish COT extreme that is present in the market is definitely pushing prices higher. Moving on to the wheat, where we have a 32% change in commercials positions. You can see the change size over here. It's larger than average change size, but we do see greater changes in the past. This is of course a bearish COT chain signal. But opening a 5 years chart, here we go, you can see how extreme this market is at the moment. And again, we are seeing a market where we have a bullish COT extreme right now. You can see how long the price of wheat has been declining, and we have seen great COT extremes coming, but they couldn't really change the major trend that we see in the wheat market right now. Moving on to large speculators COT Extreme, we have the heating oil on top of our list with a 189 report extreme in large speculators. Here we go, you can see it over here. It is of course a bearish COT extreme situation, a pretty decent one, I would say. Of course on this 5 years chart, you can see that this extreme can easily widen to even greater stress levels, so that should also be kept in mind before you act on this signal right now. But the stress is there in the market, and of course we are expecting this to have an effect on prices. Crude oil is our next market, another energy market. We have 117 report extreme over there. Let's open the 5 years chart and see it on this wider perspective. It's definitely becoming a good bearish COT extreme signal, but you may also find that this extreme can widen to even greater levels. As you can see back here in mid-2014, that signaled well the end of high prices in oil. Lean hogs is our next market with only a 36 report extreme, so I'm opening it because that's the third market. But if you look at the chart, well, to be honest, it is actually it can actually be considered a significant bullish extreme level, because as you may see on this 5 years chart, commercials don't tend to be net long in this market too often, as you can see. So it's basically the small speculators who are taking the short side of the market, which can be easily considered a very nice bullish signal. So I think we have a good a nice trading opportunity in lean hogs as well. Of course, this is a scary, volatile market, so careful with any trades here. But nevertheless, the CO2 report is pretty clear here. We have an extreme, and maybe we can act on it. That is going to be our last market for the review. I hope you enjoyed this review, and I hope to see you next week. Have a great trading week. Take care. Goodbye.